session. So our speaker today is Ram Basnet. He's worked as a senior financial analyst at Cerner Corporation based out of Legends, Kansas. He served in the United States Army and worked as a business risk consultant at Deloitte & Touch LLP based out of Manhattan. And Ram joined the U.S. Small Business Administration Kansas City District Office in 2018, and he currently serves as the branch manager in the SBA Springfield branch office, where he markets SBA programs and services across 28 counties in Southwest Missouri. SBA is a one-stop shop for your small business needs, assisting small businesses via training and counseling, small business funding, small business certifications, seeking out federal contracting opportunities, surety bonds, international trade loans, and low-interest federal disaster loans. Ram is also the project officer for the Missouri Small Business Development Center, the SBDC network. In this role, he conducts on-site compliance reviews of the SBDC Lead Center and Service Centers. He has a bachelor's degree two bachelor's degrees in economics and business management from Brigham Young University, and he's currently an MBA student at Missouri State University. He's trilingual, and he's married to his wife, Yashima. Ram, I will turn it over to you. Let me stop sharing my screen.
All right, well, thank you, Katie, and good afternoon, everyone. Let me see if I can share my screen here real quick. Let's see. Share screen.
While Ram's working on that, if you have questions throughout his presentations, you can go ahead and throw them in the chat, and I will find a chance to ask those, or we will have Q&A when he is finished. I know we've got a lot of info to cover today.
All right, can you see my screen?
Yes.
Is it in a presentation mode?
Yes.
Okay, great. I'm going to turn off my video because the bandwidth that I have here is not optimal. Again, good afternoon, everyone. Ram Basnet with the Small Business Administration here in Springfield, Missouri branch office. I want to thank SCORE for putting this together. Originally, we had planned this to be a full PPP forgiveness process webinar, but then the Economic Aid Act was signed back in December 27, and we got new additional information. So instead of postponing or canceling this webinar, we decided to present to you what we have, keeping in mind and recognizing that the new regulation had changed the forgiveness process to some extent as well. And I will touch base that as well. A couple of notes here. A lot of this information is fluid. Things are changing by the hour. We might get another interim final rule as soon as we are done with this webinar. So the information that we have here is as of today, and it's subject to change. So to get up-to-date information on PPP or provisions related to small business in the new Economic Aid Act, please visit sba.gov/PPP, or you can also go to treasury.gov/cares. Okay. With that, I'm gonna get started here. So the Small Business Administration was established in 1953 with the Small Business Act of Congress. We often get confused with some kind of small business association, which we are not. We are an independent federal agency, and the mission of SBA is to help small businesses start, grow, expand, and recover. Because of the coronavirus pandemic, you probably know SBA through the Paycheck Protection Program loans or the economic injury disaster loans. Okay. Now, today I'll provide you a high-level overview of the updates on economic injury disaster loan, the reopening of the PPP, and some information about PPP forgiveness as well. So let's start with the economic injury disaster loan. The economic injury disaster loan is available to eligible small businesses that were in operation prior to January 31 of 2020. It normally provides you working capital needs to pay your business obligations for around 6 months based on your historical working capital needs and also the ability of your business to repay that loan. SBA makes a determination on how much to offer you once you apply and once your application gets approved. Now the interest rate is fixed for small businesses. It's 3.75%. 30-year for nonprofit it is 2.75%, and the payments are deferred for 1 year after receiving the funds, and there is no prepayment penalty. Collateral is required for loans over 25,000, and only business collaterals. SBA will not decline a loan for lack of collateral. And the Eidl loan is not forgivable. The Eidl loan application deadline has been extended through December 31, 2021. So if you have not applied for the economic injury disaster loan, you apply online yourself through SBA's website, and the link is here, and I will provide a copy of these slides so you'll have these links and all other resources that I'm talking about today. Okay. Now, one thing that I want to mention here is back in the day when you applied for the economic injury disaster loan online yourself, you fill out an online application, and that same application worked for two things. One was economic injury disaster loan advance, which was essentially a grant. It was $1,000 per employee as of January 31, 2020. So the same application worked for the loan piece of it. People often get confused. I just want to be very clear that application, if you check that I would like to get considered for Eidl advance box when you apply that loan online. The same application worked for two things, Eidl advance and the Eidl actual loan itself. Okay. And the advance was something you didn't have to pay it back, but then the loan, you have to pay back the loan, and the loan is not forgivable. Okay. All right. So who should apply? Businesses that are directly affected by the disaster, that are small, based on SBA size standards, private nonprofit organizations, faith-based organizations, agricultural enterprises, sole proprietors, independent contractors, self-employed individuals, and so forth are eligible to apply. You are ineligible to apply for the economic injury disaster loan if your business is engaged in illegal activities, loan packaging, speculation, multi-sales distribution, gambling, investment or lending. Also, businesses which principal owner is presently on parole or probation following conviction of a serious crime offense, you cannot apply for the Eidl. So all owners that own 20% or more of the business are required to be included on the application. When in doubt, please apply. The SBA's Office of Disaster Assistance Economic Injury Disaster Loan team will provide you with explanation if you get denied for any reason. Okay, so you applied already. So now what, right? So after submitting your application, for those that received the grants, you probably saw the money in your bank account out of nowhere in the multiple of that 1,000 per employee. But then shortly after that, you should have received an email from SBA's team requesting you to create an account in their portal. There is a snapshot of what that should have looked like here on the right-hand side. Please be mindful that even though we are the same SBA, the economic injury disaster loans are handled by the SBA's Office of Disaster Assistance. So I do not have the ability to check the status of your application. So you would have to contact SBA's Office of Disaster Assistance customer service hotline at 1-800-659-2955, or you can also email disastercustomerservice@sba.gov. Okay. So this is what the Eidl portal looks like. Once SBA reviews the application, they offer you a specific amount. There is a minimum and a maximum amount. Using this sliding scale, you can adjust the minimum or maximum amount to, in essence, you can choose how much you want to accept. And then the loan breakdown section here will provide you terms and payments amount based on the total loan that you have selected. So the loans over 25,000 require collateral and are subject to Uniform Code of Commerce filing by SBA or lien on the business assets. A fee of 100 will be applied in order to file the lien. The fee will be deducted from the loan amount. So basically, based on your application and all the documents that you have provided, SBA offers you a specific amount. You decide how much to accept. So when you have confirmed your loan offer amount, your application will move to a lending decision stage if approved. So every stage has some form of approval. So if approved, you'll receive an email instruction to electronically sign these closing documents. Please download and review the loan agreement before signing it. Funds are typically dispersed within 5 to 10 business days. After signing, you'll have 60 days to review and sign loan documents. And again, many people are concerned with the status of these loans. Please be mindful that we are at unprecedented times, and there are millions of applications that are currently being processed. A little over north of 14 million, I think, last time that we got an update. And SBA is a relatively small agency, and we're doing all we can to get these applications processed. And these applications will be processed in the order that they were received. So how can I use the Eidl funds for? Basically, the Eidl loans are designed to help with your working capital needs, companies' day-to-day obligations of the business during the recovery period. You cannot use Eidl funds you cannot use Eidl funds to refinance long-term debt. You can use the funds for, to pay your monthly mortgage, interest, utility. So basically your working capital needs to run your business, okay? And then again, you cannot use it for refinancing long-term debt. You cannot use it to expand your business or to acquire fixed assets, relocation, and paying for a penalty resulting from non-compliance with law, contractor malfeasance, and things like that. Okay? And businesses should keep receipts and records of the use of Eidl funds to document how loan proceeds were utilized for at least 3 years from the date of the final loan disbursement. So now, Eidl declines and reconsideration. Applicants may have received a decline from the SBA for their Eidl loan at any point during the processing. If you're declined, you'll receive an email or a letter providing the reason for the decline, as well as instructions to request reconsideration of your application. SBA allows 6 months from the date of the decline letter to provide additional information. So if after submitting reconsideration, the loan is declined a second time, SBA allows 30 days to provide additional information. So request for reconsideration must be submitted in writing within 6 months from the date of the decline letter. The documentation to include in your request would include copy of your decline letter, a short letter requesting reconsideration. We have an example in the next slide. Copy of your most recently filed federal tax return, including all schedules, a copy of your government ID, example like driver's license, and then also completed and signed copy of IRS form 4506T. You fill out these lines from 1A through 6, and then make sure the names on your IRS form matches the name shown on your tax return. And then you fill out the relevant forms and sign your forms and date and put telephone numbers and things like that. And then you have an option to either there is a mailbox you send those things to. You can also mail it physically or fax it. From convenience perspective, emailing it is probably the best route. Here's an example of how a cover sheet would look like to request a reconsideration. And again, we're going to share these slides with you so you'd have a copy of this. Okay. Request for additional funds. So you can also request additional funds than what you were offered. The suggested documentation to include in your request would be the cover letter. Again, a short letter of explaining why you need more funding, your taxes, your IDs, Again, the IRS Form 4506T, and then also the schedule of liabilities as well. And then you submit your request for reconsideration or request for increase to this email here. You can also mail it. You can also fax it. If you're requesting more EIDL funding, please write increase in your subject line. Okay, so requesting subordination, EIDL lien or payoff information. So if you're moving or selling your business assets, and if you need to temporarily lift or change the UCC filing on your property or asset, you can email your request. There are 2 email addresses here that is provided to you. And please make sure you write COVID subordination in the subject line of your message. And then the EIDL borrowers may also contact the SBA Disaster Loan Servicing Center. Here are some phone numbers for questions of EIDL payoff information. Borrowers and lenders, you must remit EIDL refinance payments to SBA electronically using the Treasury's website, pay.gov, and you have to complete the forms there. So you basically, if you are refinancing, if you want to remit your EIDL refinance payments to the government or the SBA in this case, you would use the pay.gov platform. EIDL subordination request can also be sent via mail to this address. And again, the preferred is via those emails. They're very good with responding to those emails. And by the nature of sending physical mails and things like that, it might take a while until you hear from the processing team. Okay. So here, this slide has EIDL resources. Here is a link to the EIDL frequently asked questions put together by SBA. It has a wealth of information, and if you have many of your questions might be answered in this document. So I strongly encourage you to go through it. And the second is basically the link where you apply for EIDL.
We've got a couple of questions in the chat. Now might be a good time to ask those.
Okay, sure.
Jana wondered if a company does not use all of their EIDL funds within 6 months, can they hold the funds since the pandemic is not over? So she says, if my business received 30,000 in June, but I have to date only used 10,000 of those funds, does the excess 20,000 have to be returned immediately, or can it be retained by the company since the pandemic is not over?
Well, that is your loan. At the end of the day, you have to pay it back to the government, including interest. So you have to make that determination yourself, whether to keep it or to pay it back. Well, you sign the loan agreement, it's your loan, and you make that determination.
Okay. And another question from Matthew, he asked, if you get the PPP, can you get the EIDL advanced? And then he mentions the EIDL advance says no longer available on the website.
Correct. So the EIDL advance is no longer available. The reason I was mentioning at the beginning was there was some confusion around when people talk about EIDL, people were confused. Well, where did I apply for EIDL advance, or what is the EIDL loan? So basically what I was trying to say was the same application worked for 2 things, and the EIDL advance, they ran out of funds. So after after July, people stopped receiving those grants. But then, yes, if you applied for EIDL, you can apply for PPP as well. And I have a little more information when we come to PPP Forgiveness or PPP Reopening, where I'll address a little bit about the EIDL advance grants that were being deducted from PPP in the past, but that has changed now.
Okay, those are our 2 EIDL questions. The rest are about PPP, so I'll let you kind of jump into your next section and we'll get to those as we get to that topic.
Okay, sure. All right, so so SBA and Treasury have announced a PPP reopening, and they have issued new guidance. There are 2 interim final rules, one for PPP first draw and other for PPP second draw. And again, the PPP first draw is the community financial institutions were able to take applications since yesterday. for first draw. And then for PPP second draw, the same community financial institutions will be able to take applications on Wednesday, which is tomorrow. And then shortly thereafter, all other participating lenders will be able to take these applications. And again, just be mindful here that the information is current as of January 10, and the most up-to-date information would be on sba.gov/PPP. So let's see what are some of the key PPP updates, right? So this round of the PPP continues to prioritize millions of Americans employed by small businesses by authorizing up to $284 billion toward job retention and certain other expenses through March 31, 2021, and by allowing certain existing PPP borrowers to apply for a second draw PPP loan as well. So the key PPP updates, and again, we just talked about two things, right? One is PPP first draw. This is for people who never applied for PPP before, but were eligible. And the PPP second draw is for people who applied for PPP in the past and have obliged with all the regulations, and they have met new requirements as well. And we'll talk about that a little bit. Besides that, just a few high-level highlights of the PPP. PPP borrowers can set their PPP loans cover period to any length between 8 and 24 weeks to best meet their business needs. In the past, small business owners had to choose between 8 or 24 weeks. Now they can select anything between 8 and 24, whatever works best for them. It has to be at least 8 weeks and at most 24 weeks, between 8 and 24 weeks. And PPP loans in the past, it was to be able to be forgivable. It was 60% payroll and 40% mortgage interest, rent and utilities. But then because of the Economic Aid Act, the expenses have been expanded to include operations expenditures, property damage cost because of the riots that happened during 2020, supplier cost, worker protection expenditures. This would be your PPE, and if you have a sneeze guard and things like that, that pertains to COVID-19 pandemic, then those are eligible expenditures as well. The program's eligibility is expanded to include 501c6, housing cooperatives, destination marketing organizations, among other types of organizations. The PPP provides greater flexibility for seasonal employees. This is basically in order to calculate payroll cost, seasonal employees can utilize any time between February 15, any 12-week period between February 15, 2019 and February 15, 2020. Okay, let's see here. Certain existing PPP borrowers can request to modify their first draw PPP loan amount, and certain existing PPP borrowers are now eligible to apply for a second draw PPP loan. So the increase is very narrow. These are for folks that, let's see, for folks that meet specific criteria. Maybe the regulation was changed and they should have gotten a higher loan. Or for example, let's see, for seasonal employers, for people, for partnerships, for farmers and ventures, and things like that. So it's very narrow in terms of applying for an increase. So for the second draw, a borrower is generally eligible for a second draw PPP loan if the borrower previously received a first draw PPP loan and will or has used the full amount only for authorized uses. The borrower has no more than 300 employees, and the borrower can demonstrate at least 25% reduction in gross receipts between comparable quarters in 2019 and 2020. So these are high-level requirements of the second draw PPP. All right, so here are a bunch of documents here. Of course, we'll share these slides with you. The first one, the forms have been updated for first draw and also for second draw for both borrowers and lenders. I strongly encourage you to look at these forms. towards the bottom of the form, it has instructions. It will most likely answer a big chunk of many of the questions you might have in terms of eligibility and how to calculate amounts and things like that. They have done a very good job with providing that information in the instructions. So I strongly encourage you to go through these forms for first draw and second draw and look at those instructions. There are some guidance and resources here as well. There is a document that talks about accessing capital for minority, underserved, veteran, women-owned business concerns and guidance. There's also a one-pager that has a top-line overview of first draw PPP loans, top-line overview of second draw PPP loans. And if you want, there is also the interim final rules that I have attached in this slide, where you can go through the rule and figure out information that is pertinent to you. In the interim final rule, there are many sections in a Q&A format, so that answers a lot of these questions. And it has a lot of information on both. Interim final rule is around more than 80 pages. Rule 1 and Rule 2 is around 44 pages, but if you just scan through them and find sections that are applicant to you, many of those are in Q&A format. And then, as you might have known from the previous PPP, there is the PPP FAQ, and I have shared that link here as well if you have to go back and find some information. And as new frequently asked questions get added, I believe it will be added to the same document as well. And then again, for updates, new information, sba.gov/PPP or treasury.gov/cares. Okay. And then I have just a few slides for forgiveness, and then I have a few more things that I want to mention, and then I'll open up for Q&As here in the next couple of minutes. Okay, so for forgiveness, right, as mentioned in the interim final rule that was released on January 6, 2021, SBA intends to issue a consolidated rule governing all aspects of loan forgiveness and the review process. So as you might have known, if you have already applied for forgiveness, or if you were in the process of applying for forgiveness, there were 3 different forms, one for $50,000 and less, one for $50,000 to $150,000 that was if you meet certain requirements, and then another was for all other businesses that did not that could not use the under 25 and less than 150 forms. The borrower now has the option to select a covered period between during which they can use PPP loan process anytime between 8 and 24 weeks after disbursement. We talked about this. SBA will no longer deduct Eidl advances from forgiveness payment. So this was of concern to many folks. If lender has already received a forgiveness payment, net of an Eidl advance, SBA will provide a reconciliation payment to lender to be applied to the outstanding loan balance. So if you have applied for forgiveness already, and if your Eidl advance was taken out, you'll be made square. So there will be a reconciliation done, and then money will be remitted to the lender. Okay. And then the under development simplified forgiveness application for loans $150,000 and under. So we are awaiting guidance for this loan application form for $150,000 and under. And again, these are for folks that are yet to receive forgiveness, that have not received forgiveness. Okay, so loan forgiveness process and timeline. I just wanted to give you a high-level overview of what that process looks like. You submit forgiveness forms to your lender, and again, the PPP loans are administered through participating SBA lenders. So you work with a lender when you apply for your PPP loan. When you apply for forgiveness, you work very closely with your lender. The only time you apply for the loan online yourself is the economic injury disaster loan, and I have already shared that link with you through the SBA's website. So I want to be very clear. Eidl, you apply online yourself through SBA's website. PPP, including forgiveness, you would have to apply through your through the bank that is participating in the SBA's Paycheck Protection Program that applies for both PPP and also forgiveness. So once you get your PPP loan and once you have consumed the proceeds of that loan for eligible purposes, you submit application to your borrower, to your lender, and the lender reviews and submit forgiveness decision to SBA. So the lender, based on the documents that you submit, the lender makes that determination and submits that decision to the SBA. And then the SBA reviews lender decisions and makes a determination on loan forgiveness subject to any SBA review of the loan or loan application. So basically, lender has 60 days to make that decision once you submit your application. And once the lender submits that application to SBA, SBA has 90 days. So if borrower does not submit forgiveness application within 10 months of the end of the covered period, deferral on PPP loan ends and borrower must begin making payments. So basically, the PPP loans are deferred for until 10 months after the end of your covered period. After that, you would have to start making monthly payments. So if you want a full forgiveness, then you would have to apply for forgiveness before that time frame. You can apply for forgiveness anytime, but if you want full forgiveness, then you ought to apply before you start making monthly payments. Okay. Now, eligible cost, again, payroll cost, business rent payments, mortgage interest payments, utility payments, and covered eligible expenses have been expanded to include operations expenditures, property damage cost, supplier cost, and worker protection expenditures because of the Economic Aid Act. In order to receive a full forgiveness, at least 60% has to be for payroll, and then remaining 40% for other qualified expenses. And then if the salary wage reduction can be no more than 25%, all other things still apply. Then of course, we are still awaiting guidance, additional guidance on this forgiveness. And as we get that information, we'll be more than happy to share that with you.
Can I jump in and ask a couple questions related to this that have come up? First of all, Todd was asking about, he had been told that if a facility is owned by a family member, that the rent is not eligible for forgiveness. Do you know if that's correct?
So a facility is owned by a, I didn't know the answer to that off the top of my head. We're gonna have to check that offline because it's very specific.
Okay, Todd, we can check on that for you. And then the other question was if you could elaborate a little bit on supplier costs, what that might refer to.
Supplier cost.
As far as.
Hold on just 1 second here.
Mm-hmm.
Okay, so supplier
that would affect restaurants more than other sorts of businesses because they might have food that would go bad, but that's really the only coverage of that definition that I've come across.
So basically, the supplier cost are the expenditures to a supplier pursuant to a contract, purchase order, or order for goods in effect prior to taking out the loan that are essential to the recipient's operations at the time at which the expenditure was made. Supplier cost of perishable goods can be made before or during the life of the loan. So yeah, these are contracts that you had with your supplier for essential business needs.
Thank you.
Mm-hmm. Any other questions, or can I move along?
You can move along. We have a few more, but we'll save those for a little bit.
Okay. And then here you have, they have frequently asked questions for forgiveness as well. So many of your questions will be answered there. And then again, for most up-to-date information, you'd visit these websites that I have mentioned before. And then I want to touch base a little bit about SBA resource partners. SBA funds many organizations nationally to provide training and counseling and things like that to small businesses throughout the US, including US territories. And SCORE is a part of them. There is also small business development centers, women's business centers, veterans business outreach center, and so forth. You can click on this link, and once you provide your zip code, you can find SBA resource partners that can not only help you with writing a business plan, financial projections, and be mindful that these resources are not only for startups, but for existing businesses that need additional help as well. And all of these resources are equipped in some form to help you with many of the provisions of the CARES Act and also the Economic Aid Act as well, in terms of filling out the applications and getting additional guidance and things like that. With that, there are a few more things that I want to mention here that people have normally asked me. And then after that, I'll open up for questions and answers. So per the Economic Aid Act, a community financial institution is one of the 4 types of lenders. CFIs, or community financial institutions, have early access to the platform to ensure increased access to PPP for minority, underserved, veteran, and women-owned business concerns. So the CFIs would be community financial development institutions, CDFIs, minority depository institutions, MDI, which would include qualified banks and credit unions as well, certified development company, and a microlender intermediary. And a summary of key terms of PPP. This is for both first draw and second draw. The guarantee percentage is 100%. No collateral will be required. No personal guarantees will be required. The interest rate will be 100 basis points or 1%, calculated on a non-compounding, non-adjustable basis. The maturity is 5 years. So eligible applicants that did not receive a PPP loan prior to August 8, 2020 will now have the ability to apply for a PPP first draw loan on or before March 31, 2021. So that's the deadline to apply for these. So eligible borrowers that previously received a PPP first draw loan may apply for a PPP second draw loan up to $2 million with the same general loan terms as their PPP first draw loan. For most borrowers, the maximum loan amount of a PPP second draw is 2.5 times their average monthly 2019 or 2020 payroll cost up to $2 million. So for PPP first draw, the max is just like the PPP before, that is $10 million. And for PPP second draw, the max is $2 million. Okay? So for borrowers in the accommodation and food services sector, or the NAICS code 72, that starts with 72, that is North American Industry Classification System, NAICS code 72, accommodation and food services sector, the maximum loan amount for a PPP second draw loan is 3.5 or 3.5 times average monthly 2019 or 2020 payroll cost up to $2 million. PPP second draw loan applicants must use the new SBA form 2483 SD, which is the second draw borrower application. We are awaiting additional guidance on all other relevant programs, like the Shuttered Venue Operators Grant Program, resuming of the Eidl Advanced Grants, etc. So we're waiting additional guidance on that. Let's see here. So for farmers and ranchers, in the past, for the past PPP, they had used net income in 1040 Schedule F, but for this, the Economic Aid Act has amended that to gross income instead of net income. I just want to make a note of that. Okay, let's see here. And I did mention for the seasonal employers, right? The time period that they utilize to calculate their payroll cost is any 12-week period between February 15, 2019 and February 15, 2020 to get the maximum amount of loan. With that, I can attempt to answer any questions you might have.
Okay, great. Todd had some great questions. So we'll start with this one. He asks, for forgiveness, does each employee have to receive 60% of their average payroll throughout the 24-week period, or is forgiveness only figured on 60% of the grand total?
So I think there is a section in forgiveness that says, let's see here. As long as the salary or wage reduction is no more than 25% during the covered period, then it would be the aggregate.
Great. So you mentioned that the 24-week period, if a business elects to use a 24-week coverage but is not able to stay in business after that, will the qualified expenses still be forgiven?
Can you repeat that question again, please?
Yes, if a business elects to use a 24-week coverage with the PPP loans, but's not able to stay in business after that, will the qualified expenses still be forgiven?
So are you implying that the business is going to file for bankruptcy?
Do you want to unmute Todd there and clarify that just a little bit?
Not necessarily file for bankruptcy, just elect to close.
Well, that is a little tricky, I think. We'd have to look more into that. Because ideally, once people get these PPP loans, our hope is they would stay in business and apply for forgiveness and get that full forgiveness.
Well, I think all you have to do is look at the amount of businesses that are closing to see that a lot of people are just right on the razor's edge of closing or staying open. And just because they've got 24 weeks of help, that doesn't necessarily mean that they will be able to continue.
Yeah, like I said,
personally, my business did a lot of work on buildings that were either funded or being done under a historic tax credit situation, and all of that money was completely wiped away to fund the virus response, and I don't see that coming back for years. So it will be a very thin few years to stay in that game, and that's what I'm trying to figure out, is whether if I go ahead and do a second draw of the PPP, even though we had the first part forgiven, if I go ahead and do a second draw and we just are not able to stay open a month after that 24 weeks expires, are they going to come after me for the whole amount?
Todd, that I do not know, so we're going to have to look into this for additional guidance. Based on the IFRs, I have not seen any, but I'll check on that for you.
All right, thank you.
So basically your concern is if the business is closed after the covered period, after drawing the second draw PPP, what happens, correct?
Right.
Okay.
Okay.
All right, thanks, Todd.
Another question, HR expenses and accounting costs are included in the PPP second round. Can you elaborate on that at all, Ron?
HR expenses, hold on just a second. I'm pulling the IFR here.
Of course.
So in general, the operational expenses would include like accounting softwares, HR softwares, your subscriptions for SaaS and things like that. So the IFR does have a detailed explanation of that, which I can copy and paste later. I can't seem to find it right now.
Okay, we can maybe get that link in the slides or include it with the information we send out.
So if you have an accountant, prepare your quarterly tax statements, etc., that's not covered only if you buy software to do that?
So what I have here, it says payment for any software, cloud computing, and other human resources and accounting needs. And I think that is broad.
Other, when it, okay, the sentence that says other resources and accounting needs.
Correct.
So that's, okay. That's
It's very
vague.
difficult to specifically pinpoint because the language have been left to incorporate you know, as many operating expenses as possible, I think.
Well, that can be a pretty large one.
And like I said, I can copy and email you that section from the IFR once I find them.
This is Mary Overby, the admin for SCORE of Southwest Missouri. We are taking note of these questions that maybe haven't been fully answered. And when we send out the recording, we'll be following up on these. We want to know as well for our clients. So Ron, thank you for that. And we'll just connect with you afterwards to make sure that we have that information available. Because as you've mentioned, it is very vague in many ways, and it's changing rapidly. So we're doing our best to stay up to date on that as it changes. So just bear with us all as technical assistance providers, because we have as many questions as you guys do very often.
Yeah, and we just wanted to provide with to you what we had so far, and then we'll have more of these webinars as we get more clarification and more information. Would be happy to join and share with you all.
Any other questions for Ram?
I did have one more. Sorry, I'm being so mouthy. The covered period, let's say that my loan came in on April the 15th and I chose a 24-week coverage. So that would mean that the 15th of October would have been the end of my covered period. Is that correct?
So the cover period starts on the day you receive full disbursement on loan.
So that was April the 15th. So then I count 24 weeks from there as my covered period, which is 6 months.
24 weeks from that day, correct.
And then the 10-month clock starts on that day.
The 10-month clock starts on the
for loan forgiveness data.
So the 10-month would be the 10-month starts the first day at the end of your cover period.
Okay.
So in essence, grossly, it is a 16 months deferment if you choose that 24 weeks.
All right, thank you.
Mm-hmm.
Okay. Any other questions?
I have questions. So if we're working with someone that received PPP round 1 and they're wanting to receive PPP round 2, where would you recommend that we look with them or that have them go to really answer some of these questions? I know you mentioned it, but I just want to reiterate some of the resources and the where to go online.
So one, I would strongly encourage them to work with their lender that they are planning to submit for that second draw. Other than that, then of course the application form itself has many questions answered in the instructions if they haven't got a chance to look through that yet. And then the IFRs and things like that. So if I were a small business owner, I would work very closely with the lender that I was planning to apply for the second draw.
Okay. Anything else? All right. Well, thank you everyone for attending our Tuesdays at 2 webinar today. Everyone who is registered, I believe, Mary, correct me if I'm wrong, but everyone who is registered will receive an email that will include the slides.
I had 5 people that I didn't find that attended today that I don't see their actual email in our registration. So if you think you might be one of those people, shoot me an email so I can make sure. But everybody who registered will receive the PowerPoint slide deck and PDF form, as well as a copy of this recording so that you can go back and look at it.
Okay, great. So I hope we'll see you all next month for our tax tips for businesses.
Katie, Gail just had a quick question.
There. Gail asked, any projections as to when the simplified forgiveness form might be available?
I have no idea. And if I tell you anything, it is pure speculation.
Okay. We'll try to keep you in the loop, Gail. We'll keep Rom available and keep everybody updated.
Yeah, the only caveat of hosting these webinars is when you go back and look in the recording, you have to be cognizant that things might have changed.
Sure.
So the go-to place is sba.gov/ppp, or you can also go to treasury.gov/cares as well. As more new information comes in, it gets posted there.
Okay, perfect. If you think of additional questions after the webinar, I imagine you can email Mary and she can make sure we get those addressed in any additional questions that we were going to address or find extra information on. So, okay.
That email address in the chat feature real quick, Katie, if we can just give people a minute to take that down. It's the email that you actually received all of the webinar information from today. It's the exact same one, and I'm the person, the face behind that most of the time, other than Bob Headley. Hi, Matthew. Thanks for waving at me.
Okay, we'll leave that up there just a moment so everybody can write it down if you need it. And I hope we'll see you all again soon.
Thank you, Rom.
Thanks, Rom.
We appreciate you, especially with all the changes all the time.
You guys are very welcome. And I was fully aware that I wouldn't have answered to all of your questions, but I just wanted to share with you what we knew so far, with recognizing that it would help at least someone.
It has definitely helped me as I work with other business owners, and I'm sure I know we have quite a few SCORE mentors on here today. And so coming from the SCORE chapter itself, thank you so much, because as we work with clients, we need this information as well as the business owners. So you are trickle down helping a ton of people.
All right, well, thank you, everyone. I appreciate the opportunity.
Bye, guys.
Bye-bye.
Bye.